Owning a home is a dream for many, but do you know the hidden costs that come with it? You might think it's just about paying your mortgage, but there's much more to it. Did you know that the average homeowner spends around $9,000 a year on maintenance alone? Or that 40% of homeowners underestimate their monthly housing costs by $500 or more? These are expenses that can catch you off guard and strain your finances. What about the surprising fact that energy inefficiency can add up to 30% to your utility bills? Or that landscaping can quietly cost you up to $2,000 a year? The rich know these hidden costs and how to manage them. They budget wisely, plan for unexpected expenses, and make smart investments to keep their finances healthy. In this video, we'll uncover the secrets the rich use to handle these hidden costs. From avoiding the silent budget drainers to understanding the real price of home improvements, we'll dive deep into what it truly takes to own a home without breaking the bank. Get ready to learn strategies that can save you money and stress, and see home ownership in a whole new light. Stay tuned as we explore these often overlooked costs and share practical tips to help you navigate the true financial landscape of owning a home. Let's get started. Chapter 1: Beyond the Mortgage, the Silent Budget Drainers. When you think of owning a home, the first thing that comes to mind is often the mortgage. But there's more to it than just your monthly payment. Property taxes, for example, can vary widely depending on where you live. In some areas, they can be as high as 2% of your home's value annually. That's $10,000 a year for a $500,000 home. Home insurance is another silent budget drainer. On average, Americans spend about $1,200 a year on homeowners insurance. But that number can skyrocket if you live in a high-risk area for natural disasters like hurricanes or earthquakes. Homeowners Association (HOA) fees can be another significant expense. These fees can range from a few hundred to several $1,000s a year. They cover community amenities and maintenance, but they can add up quickly. One surprising fact is that 40% of homeowners underestimate their monthly housing costs by $500 or more, according to a study by the National Association of Home Builders. This can lead to financial stress and even foreclosure if not managed properly. The rich know to budget for these expenses and often set aside an extra 1–2% of their home's value annually for unforeseen costs. They also shop around for the best insurance rates and are proactive about appealing property tax assessments to save money. Chapter 2: Maintenance Mysteries, the Real Price of Upkeep. Maintaining a home is like owning a car. There's always something that needs fixing or replacing. The average homeowner spends about 1–3% of their home's value on maintenance each year. For a $300,000 home, that's $3,000 to $9,000 annually. Routine tasks like HVAC servicing, gutter cleaning, and pest control can add up. Ignoring these can lead to bigger, more expensive problems down the line. For example, a small roof leak, if left unchecked, can cause extensive water damage, costing tens of thousands of dollars to repair. The rich often follow a preventative maintenance schedule to catch issues early. They use apps and services to keep track of maintenance tasks and hire professionals for regular inspections. This proactive approach saves them money in the long run and preserves the value of their property. A unique fact is that homes with well-maintained systems and appliances can sell for 10% more than those with visible neglect. This shows the financial payoff of keeping up with maintenance. Chapter 3: Energy Efficiency, the Stealthy Expense. Energy costs can be a stealthy expense that many homeowners overlook. Heating and cooling alone can account for nearly half of a home's energy use. On average, households spend about $2,060 annually on energy bills, according to the U.S. Energy Information Administration. Investing in energy-efficient upgrades can lead to significant savings. The rich often install smart thermostats, energy-efficient windows, and better insulation. These upgrades can reduce energy bills by up to 30%. One interesting statistic is that homes with solar panels can save homeowners about $600 a year on electricity bills. While the initial investment can be high, the long-term savings and tax incentives can make it worthwhile. The rich also take advantage of energy audits. These audits identify areas where a home is losing energy and suggest improvements. According to the Department of Energy, an energy audit can save homeowners 5–30% on their energy bills. A smart move is to replace old appliances with Energy Star rated ones. These appliances use 10–50% less energy than standard models. Over time, the savings on utility bills can offset the higher upfront cost. By understanding and managing these hidden costs, you can protect your finances and enjoy the benefits of homeownership without the financial surprises. The strategies the rich use are not out of reach, they just require a bit of planning and foresight. Chapter 4. Renovation Realities, the high cost of home improvements. Home improvements can be a double-edged sword. While they can increase your home's value, they can also drain your wallet if not planned carefully. A typical kitchen remodel, for instance, costs around $25,000, according to Home Advisor. But the rich know that not all renovations give a good return on investment, ROI. One strategy is to focus on improvements that add value. Kitchen and bathroom remodels usually have a high ROI, often recouping 70–80% of the costs. However, a home office remodel only returns about 54% of the investment. Knowing this helps prioritize projects. Another smart move is to set a realistic budget and stick to it. It's easy to get carried away with fancy upgrades, but this can lead to overspending. The rich often set aside a contingency fund of about 10–20% of the project cost for unexpected expenses. It's also wise to get multiple quotes from contractors. This not only helps find the best price but also ensures you're hiring someone reputable. According to Angie, homeowners who get at least 3 quotes can save up to 20% on renovation costs. Don't forget about permits. Skipping permits can lead to fines and issues when selling your home. The rich always ensure their renovations are up to code to avoid future headaches. Chapter 5. Landscaping Luxuries, the hidden green fees. A beautiful yard can enhance your home's curb appeal, but it can also come with hidden costs. Regular lawn care, tree trimming, and seasonal upkeep can add up quickly. On average, homeowners spend about $1,000–$2,000 a year on landscaping, according to the National Association of Landscape Professionals. One strategy the rich use is xeriscaping, which involves designing landscapes to reduce or eliminate the need for irrigation. This can cut water bills by up to 50%. Drought-tolerant plants and efficient irrigation systems can save money in the long run. Another tip is to invest in quality outdoor furniture and decor. These items can withstand the elements better, reducing the need for frequent replacements. According to a study by Home Depot, high-quality outdoor furniture can last twice as long as cheaper alternatives. The rich also know the value of DIY landscaping. Simple tasks like planting flowers, mulching, and mowing the lawn can save hundreds of dollars a year. Plus, it's a great way to stay active and enjoy the outdoors. Chapter 6. Insurance Insights, the fine print fiasco. Homeowners insurance is a must, but it's important to understand what it covers and what it doesn't. The average annual premium is about $1,200, but this can vary based on location, coverage, and the home's condition. One strategy is to review your policy annually. This ensures you have adequate coverage and can help identify any gaps. For instance, standard policies often don't cover flood damage. If you live in a flood-prone area, you might need additional insurance. The rich often increase the deductibles to lower their premiums. While this means paying more out of pocket in case of a claim, it can save hundreds of dollars annually on premiums. Bundling home and auto insurance is another smart move. Many insurers offer discounts of up to 20% for bundled policies. This can lead to significant savings over time. It's also essential to document your belongings. In case of a loss, having a home inventory can speed up the claims process and ensure you get the full value of your items. The Insurance Information Institute recommends updating this inventory annually. By understanding the nuances of homeowners insurance, you can protect your investment and avoid financial pitfalls. The strategies used by the rich are simple yet effective, making them accessible to anyone willing to put in the effort. Chapter 7. The Depreciation Dilemma, Hidden Losses in Property Value. Many homeowners assume that their property's value will always increase, but that's not always the case. Property values can fluctuate due to various factors such as market conditions, neighborhood changes, and even natural disasters. According to Zillow, home values can depreciate by an average of 5–10% during economic downturns. One strategy the rich use is to invest in properties in stable or growing markets. They do thorough research on local economic conditions, job growth, and future development plans before purchasing. This helps them choose properties with better appreciation potential. Another tip is to keep your home well maintained. A study by the National Association of Realtors found that homes with neglected maintenance issues can sell for up to 20% less than well-maintained homes. Regular upkeep preserves your home's value and attracts potential buyers when it's time to sell. The rich also diversify their real estate investments. They don't rely solely on the primary residence for wealth building. By investing in rental properties, REITs, real estate investment trusts, and other real estate ventures, they spread their risk and increase their chances of capital appreciation. Additionally, they keep an eye on local property tax assessments. Sometimes, property taxes can increase due to an overvaluation of your home. Appealing these assessments can save thousands of dollars over the years. It's a simple process that can lead to significant savings. Chapter 8: Smart Tech, Steep Bills, the Hidden Costs of Home Automation. Home automation can make life more convenient and increase your home's value, but it can also come with hidden costs. The average cost to automate a home can range from $1,000 to $5,000, depending on the level of sophistication. One strategy is to start small. Begin with a few essential devices like smart thermostats, security cameras, and lighting systems. These can offer immediate benefits and savings without a huge initial investment. According to a study by the American Council for an Energy-Efficient Economy, smart thermostats can save up to 10% on heating and cooling costs. The rich often take advantage of rebates and incentives for installing energy-efficient devices. Many utility companies offer rebates for smart thermostats, energy-efficient appliances, and other green technologies. This can significantly reduce the upfront costs of home automation. It's also crucial to factor in the cost of maintenance and updates. Smart devices often require regular updates to stay secure and functional. The rich plan for these ongoing costs to avoid unexpected expenses. Another smart move is to integrate devices that work well together. Choosing products that are compatible with each other can prevent the need for costly replacements and upgrades. This strategy ensures a seamless and cost-effective home automation experience. Chapter 9: Opportunity Costs, the Wealth You Could Have Built. Owning a home ties up a significant amount of capital that could be invested elsewhere. The rich are acutely aware of this and often weigh the opportunity costs of homeownership against other investment options. One strategy is to calculate the potential returns from investing in the stock market, mutual funds, or other ventures. Historically, the stock market has provided an average annual return of about 7%, after adjusting for inflation. Compare this to the appreciation rate of real estate, which averages around 3–5% annually. The rich often use the concept of house hacking to offset costs. This involves renting out a portion of their home to generate income. For instance, renting out a basement apartment or a spare room can cover a significant part of the mortgage and other expenses. Another approach is to invest in multi-family properties instead of single-family homes. This strategy generates rental income, which can be reinvested to grow wealth faster. According to a report by the National Multifamily Housing Council, multi-family properties can provide a steady income stream and often appreciate at a higher rate than single-family homes. The rich also leverage their home equity wisely. Instead of letting equity sit idle, they might take out a home equity line of credit, HELOC, to invest in high-return opportunities. This can amplify their returns, although it comes with added risk. By understanding and managing opportunity costs, you can make more informed decisions about home ownership and wealth building. The strategies employed by the rich are practical and can be implemented by anyone willing to look beyond the traditional notions of home ownership.